Good day, everyone. Welcome to Chapter 16, Equity Investments, Dividends, Share Split, and Share Rights. But before anything else, I'd like to remind everyone that today's discussion is a live presentation. So we sincerely apologize for any distractions you can hear while presenting. Moving on, this time we will understand those problems pertaining to this topic with explanations to the answers. For today's agenda, first, we will introduce you to equity investment. Second, we will have some team check-in and icebreaker. Third, we will do problem solving. And the fourth one is we will give you the summary of the whole presentation. So four members on this topic will be the ones to make a discussion of its problems. The goal of our session is to turn chaos into clarity. As we begin, our role is to keep the session on track and to ensure everyone participates in the discussion. Team check-in. Click the button below where the emojis are located. Use it when you have something to clarify or something that makes you satisfied. Select any emojis if you want to start a conversation or if you want a reaction. This serves as a go signal when someone tries to communicate with the members. So before moving on to the next slide, I'd like to ask you everyone, how are you feeling today? Are you good? Are you happy? Are you sad? Or are you mad? Well, I'd like you to choose an emoji, GIF, or image from a mood meter below that best represents how you feel at this moment. Or you can use this emoji reaction instead. So I will give you 5 minutes to do that, and your 5 minutes timer starts now. And that's it. Your 5 minutes stops now. Thank you guys for sharing your feelings, and let's move on to the next slide. Icebreaker. Before we start with the session, let's warm up with these icebreaker questions. So below are suggestions for icebreaker questions. As you can see, there are 5 questions in total, and I'd only want you to choose one. So if you have chosen your questions already, I want you to share your answers or thoughts about your chosen questions. And in answering or in sending your reactions to us or in sending your answers to us, I'd like you to put your frequently used emoji together with your answer. And that and for that we will give you 5 minutes in order to send us your answers and reactions. Your 5 minutes starts now actually. And that's it. 5 minutes stops now. Now let's move on to the next slide. And now for the most awaited and the most exciting part of this presentation. Are you guys ready? How about you, my group mates? Are you ready?
Yes.
Yes.
So without further ado, let's begin. But before presenting us the problems, I would like to request Ms. Denise Aldaba to read us the definition of equity investments and its technical knowledge. Ms. Denise?
An equity investment is money that is invested in a company by purchasing shares of that company in the stock market. These shares are typically traded on a stock. Technical knowledge first is to determine the form of equity investment. Second is to understand the recognition of cash dividend, property dividend, share dividend, and liquidating dividend. The third and last is to understand other issues related to equity investment such as share split, special assessment, the redemption of shares, and share rights.
So thank you so much, Miss Denise. Now let's move on to our first reporter for today. The first reporter for today is yours truly, Ana Mariel Tumalon. I am a BSA 1 student, and I will be the one to the first problem on 16-7 on this topic. I will explain and provide a solution, and I will assume to explain it thoroughly, and hopefully I will make you understand it clearly. So next slide, please. So problem 16-7. So there are two requirements. The first one is to prepare journal entries to record the transactions, assuming stock rights are accounted for separately. And the second one is the summary of the investment portfolio, stating number of shares and cost. So the problem is, Earth Company revealed the following chronological transaction. First, purchase 80,000 shares for 10 pesos at 40 pesos per share as a long-term investment. Second, receive a share dividend of 1 share for every 4 owned. Third, receive a cash dividend of 5 pesos per share. Receive share rights to purchase 1 share at 30 pesos for every 5 rights held. On this date, the share right has a market value of 5 pesos. Next, sold 40,000 rights at 7 pesos each. 6, exercise the remaining rights. And 7, sold 80,000 shares at 35 pesos per share. So for the solution, prepare journal entries to record the transactions, assuming stock rights are accounted for separately. So on our first transaction, purchased 80,000 shares for 10 pesos at 40 per share as long-term investment. So our journal entry for this would be debit to investment in shares 3,200,000 and credit to cash of 3,200,000. Now how did we get this 3,200,000? It's just simple. We just have to multiply 80,000 shares to 40, which is the market value of that share, and that will give us 3,200,000. Now for the second transaction, receive a share dividend of 1 share for every 4 owned. So we don't need to make a journal entry, but instead we will do memo entry. Receive 20,000 shares. Now how did we get this 20,000 shares? So in the transaction, it has been stated there that the company received a share dividend of 1 share for every 4 owned. So if you have 4 shares, you will own 1 share. So how many shares will you receive if you have 80,000 shares in total? So in order to get that, we will just have to divide 80,000 shares divided by 4, and that will give us 20,000 shares. Right? Did you get it, guys? Now for the third transaction, our journal entry would be debit to cash of 500,000 and credit to dividend income of 500,000. Now, how did we get this? So, on transaction 3, or on the third transaction, the company received a cash dividend of 5 per share. So, in order to get the total of 500,000, the 80,000 shares that we purchased originally, added by the share dividend of 20,000, that's at 100,000 share. And we will multiply it by 5 pesos, which is the market value of that cash dividend. That's why 100,000 times 5 is equal to 500,000. So in the fourth transaction, our journal entry would be debit to share rights of 500,000 and credit to investment in shares of 500,000 as well. So how did we get this 500,000? So in transaction 4, it has been stated there that the company received share rights to purchase 1 share 30 for every 5 rights held. On this date, the share right has a market value of 5. So that means that on your 100,000 shares, total shares, we will have to multiply it by the market value of 5, which will give us 500,000. Now, what is this 100,000? So, diba, your share is equal to your share rights. So if you have 1,000 shares, then your share rights would be 1,000. So since our share is equal to 100,000, that's why our share rights is equal to 100,000 as well. And we multiply it by the market value of 5. That's why we get the 500,000. Now next. For the fifth transaction, sold 40,000 rights at 7 pesos each. So our journal entry would be debit to cash of 280,000, credit to share rights of 200,000, and credit to gain on sale of rights of 80,000. Now, how did we get this cash of 280,000? It's simple. We just have to multiply 40,000 share rights times 7, and that will give us 280,000. Now, how about the share rights? So the 40,000 share rights multiplied by the original market value of that share right, which is 5. So 40,000 times 5 is equal to 200,000. And to get our gain on sale of rights, we will just have to deduct 280,000 to 200,000, and that will give us 80,000 pesos. Now, for the sixth transaction, exercise the remaining rights. So our journal entry for this would be debit to investment in shares of 660,000, credit to share rights of 300,000, and credit to cash of 360,000. So how did we get the share rights? So diba, we have share rights of 500,000 deducted by the 200,000 worth of share rights that we sold on our fifth transaction. So that will give us 300,000 share rights. That's why our share right here credited is 300,000. So how about the cash? How did we get this cash of 360,000? So 100,000 shares minus the 40,000 share rights. I mean 100,000 share rights minus 40,000 share rights. That will give us 60,000 share rights. So meaning 60,000 share rights ang nabilin sa imong 100,000 share rights. And then since gingon sa transaction ang 4, na if you have received a share rights to purchase one share at 30 pesos for every 5 rights held. So meaning if you have 5 rights, you can acquire or you can have or receive one share. So 60,000 divided by 5, that is 12,000. So this 12,000 is an addition to your total shares. And then we multiply it by the market value of 30, and that will give us 360,000. Now to get the investment in shares, simple, you just have to add 300,000 to 360,000, and that will give us 660,000. Now for the last transaction, sold 80,000 shares at 35 pesos per share using the FIFO method. Now, our journal entry for this would be debit to cash of 2,800,000, credit to investment in shares of 2,160,000, and credit to gain on sale of shares of 640,000. So how did we get this cash of 2,800,000? We just multiplied 80,000 to 35, and that gives us 2,800,000. Now to get the investment in shares, this 2,700,000 gikuha ni siya in investment in shares, di ba, we purchase shares amounting to 3,200,000, and we deducted the share rights of 500,000. That's why we have 2,700,000 divided by 100,000 shares will equal to 27 pesos, and we will multiply that 27 to 80,000, and that will give us 2,160,000. Now to get the gain on sale of shares, we just have to deduct 2,800,000 to 2,160,000, and that gives us 640,000. Next. So for the second requirement, the summary of investment portfolio stating number of shares and cost. So as you can see here, we have the summary of investment portfolio. So we have shares and cost. So your original acquisition is 20,000 shares. Since we deducted 80,000, since we know that we sold it in our seventh transaction, we sold the 80,000 shares. That's why our 100,000 shares deducted by 80,000 shares, the remaining is 20,000. And the cost for that is 540,000. So our new acquisition, di ba, we purchased or we have received a share because of the share rights that we exercise. So that share right resulted to or like gives us 12,000 shares. That's why because of that share right shares that we receive from the share right is 660,000. So 20,000 plus 12,000 is 32,000, and 540,000 and plus 660,000 is 1,100,000. So I hope you guys have understood my report. So now we will move on to our second reporters. Yes, reporters. Not one but two, because we will present to you, or we will have Miss Denise Rousseau Aldaba and Miss Shania Makiling to give us their presentation about benevolent company. So together with her partner, they will be able to report or deliver the problem of 16-8, and they will make sure to give an informative, and clear discussion in order to make it more understandable. They expect to engage their time in a meaningful way and of discussing the problem. So please help me welcome Miss Denise Aldaba. A round of applause, please. Miss Denise?
So problem 16-8. Benevolent Company had the following transactions. August 1, 2021, purchased 1,000 shares of Star Company for 60,000 pesos. October 1, 2021, purchased 8,000 shares of Star Company for 560,000 pesos. July 1, 2022, purchased 6,000 shares Star Company for 480,000 pesos. August 1, 2022, sold 5,000 shares of Star Company for 500,000 pesos. Use FIFO. Then February 1, 2023, received 50% share dividend. November 1, 2023, received share rights to purchase one new share at 60 pesos for every 5 rights tendered. On this date, the right is quoted at 10 pesos. December 1, 2023, sold all share right 15 pesos per right. So the requirements are A, to prepare journal entries to record the transactions, then the share rights are accounted for separately. B is to prepare a summary of the non-current investments in Star Company shares by block of acquisition, the number of shares, and the total cost for each book. Now let's proceed to the solutions. A. Prepare journal entries to record the transactions. The share rights are accounted for separately. So for August 1, 2021, purchased 1,000 shares of Star Company for 60,000 pesos. The entry would be debit for investments in share 60,000, then credit cash 60,000 pesos. For October 1, 2021, purchased 8,000 shares of Star Company for 560,000 pesos. The debit will be investment in shares 560,000, then credit to cash 560,000. July 1, 2022, purchased 6,000 shares of Star Company for 480,000. The debit will be investment in shares 480,000, then cash for credit 480,000. Then August 1, sold 5,000 shares of Star Company for 500,000 pesos using cash will be the debit for 500,000 pesos. Then we credit investment in shares 340,000. Then gain on sale of investment 160,000 pesos. So lot 1, 1,000 shares is equal to 660,000 pesos. Then lot 2 is 4,000 divided by 8,000 times 560,000 is equal to 280,000, which is equal to 340,000, which is our cost of investment sold. Then to get the gain on sale of investment, we simply minus or deduct 500,000 to 340,000 to get 160,000 pesos. Next slide, please. So for February 1, 2022, received 50% share dividend. we have the entry for received 5,000 shares, represent na representing 50% share dividend on 10,000 remaining shares held. Then shares now held is 15,000. Then November 1 received share rights to purchase one new share at 60 pesos for every 5 rights tendered. On this date, the right is quoted at 10 pesos. So we debit for 150,000, then the investment in shares for 150,000. So for the lot 2, 6,000, right, 6,000 times equal to 20,000. Then lot 3 is 9,000, right? Then where 9,000 times 10,000 is equal to 90,000. Therefore, we get the answer of 150,000, which is the cost of rights received. Then we have December 1, 2020, sold all shares, sold all shares at 50 right. We had debit of cash 225, then credit to share rights 150,000, then gain on sale of share rights 75. To get the answer of 225, we have 15,000 times 15 is equal to 225.
Thank you so much, Miss Denise, for that thorough explanation. And now we'll move on to Miss Shania McKilling. Miss Shania? Thank you so much, Miss Denise and Miss Shania, for that thorough explanation. And now we will move on to our third and our final reporter today. Please help me welcome Mr. J.R.O. Calasa for his presentation regarding Dirt Company. He will make sure that the presentations are learning tools that can be used as reports and more. It is mostly presented before an audience. It serves a variety of purposes, making presentations powerful tools for convincing and teaching. So he assumes that all of you will have something to learn after his discussion. Mr. JR?
Thank you. Thank you, Mr. Malon. But before I will begin to my discussion, I want everyone to bear with me as we go along with this discussion. So, the company that I will be solving is the dirt company. So, the dirt company has this current year that revealed the following transactions relating to the permanent investment. On the month of January 1, the company purchased 10,000 shares of King Company at 7 pesos per share. On the month of March 1, the company purchased 10,000 shares of Queen Company for 660,000 pesos. On April 1, the on April 1, received a cash dividend of 5 pesos per share from King Company. On July 1, received 20% share dividend from Queen Company. On August 1, purchased 10,000 shares of Princess Company at 50 pesos. On October 1, the share of Queen Company was split on a 5-for-1 basis. Same month, but another transactions receive a cash dividend of 5 pesos per month from King Company. And then on October 31, Queen Company offered a shareholders rights to subscribe to one new share for every 10 rands tendered at 20 pesos. At the time, of issuance, the market value of the right is 3 pesos. Share rights are not accounted for separately. On November 15th, exercise the Queen Company share rights. On December 1, received a cash dividend of 5 pesos per share from Queen Company. Another transactions on dated 15 sold 10,000 shares of Queen Company at 30 pesos share. Then, the requirements of this company is to prepare a journal entries to record the transactions. Second is to prepare a summary of the permanent investment of their company, showing in detail the number of shares and total cost of each investment. But let's go first. Let's go first for the first requirement, which is to prepare a journal entries record to record the transaction. So for the first month on January 1, we have debited the investment in shares of the King Company worth 700,000, credited by cash worth 700,000 as well. So how did we get this? By doing a multiplying the 10,000 purchase times the 70 pesos per share, and then we accumulate 700,000 investment in King companies. So for the March 1, the statement of this transaction is to purchase 10,000 shares of Queen Company for 660,000. So to record the journal entry of the month March 1, the investment in Queen's Company will be debit, and for the credit is cash worth both sides worth 660,000. On April 1, the transactions receive a cash dividend of 5 pesos per share from King Company. So in order for this to record a journal entries, we have to debit cash 50,000 and dividend income credit as 50,000. So the amount is just the 10,000 is multiplied to the 5 per share. So we get the 50,000 dividend income. Next is the month of July. So for July's journal entry, July 1 journal entry, the transaction is received 20,000 share dividend from Queen Company. So received two in recording the month of July. So to entry the month of July 1, received 2,000 shares representing 20% share dividend on 10,000 Queen Company shares originally held. Shares now held 12,000. So how did we get this 12,000, 2,000? By just multiplying the 10,000 times 20% share dividend, we get 2,000. Then add that to your 10,000 shares of Queen Company recorded for on March 1. So we get 12,000 shares now held. Next, on the month of August 1, we have debit investment in shares of the Princess Company worth 500,000 and credit cash 500,000. So how did we get this certain amount? So in August 1, the transactions state that purchase 10,000 shares of Princess Company at 50. So, meaning we're going to multiply the 10,000 and 50,000. So, we get 500,000. Next is on October 1. October 1 received 60,000 new shares as a result of a 5-for-1 split for 12,000 original shares. So, the transactions on October 1 state that the share of Queen Company was split on a 5-for-1 basis. So, by getting this certain amount, 60,000, the 12,000 is from the shares shares held, and then multiply it to the 5 5-for-1 split or 5, then we get the 60,000 new shares. So on the same amount, another transaction stated that receive a cash dividend for 5 pesos per share from King Company. So we record cash debit as 50,000 and credit dividend income as 50,000. So how do we get this? By using the amount purchased on April 1, January 1, and then times it to 5 per share. So we get 50,000 and on the same amount, but on uh, dated October 31, the entry of this is receive 60,000 shares or stock rights from Queen Company to subscribe for one new share at 20 pesos for every 10 rights held, or a total of 6,000 new shares. So how did we get these certain amounts? By just um, use on October 1, we have 60,000 new shares from Queen Company. So we use that one, and then divide it to 10 10 pesos for every 10 rights held. Then we get the 6,000 new shares. So next month is on November 15. Stated that we will exercise the Queen Company share rights. So we debit investment in shares of the Queen Company 120,000 and then credit cash as 120,000. So by just going same as previous, will have to multiply it. So the 6,000 is the 6,000 is recorded entry on October 31, and then times it to the 20 20 new shares for every 10 rights. So we get the 120,000. Next is on December 1, stated that receive a cash dividend for 5 pesos per share from Queen Company. So we debit cash and we credit dividend income amounting to 330,000 both. So we simply add all the shares from Queen Company. So we have 60,000 plus 6,000 is equal to 66,000. Then I times it with the 5 pesos per share. So we get that 330,000 dividend income or cash. Then on December same amount but on December 15, cash will be the journal entry of this is we debit cash and we credit investment in shares of the Queen Company and also the gain on sale of shares. So how did we get this? Just the 10,000s times it to the 30,000s, 30 pesos per share, and then we get the 330,000. That is e-cash. Then to get the investment in shares of the Queen Company is just divide the 660,000 coming from the, so we we just simply divide the 660,000 coming from the March 1 journal entry and then divide it with 60,000, which is our shares from Queen's Company, and then we get the 11 and then times it with the 10,000, then we have 110,000 investment total in investment in shares of the Queen Company. So next is now that we already solved the solutions requiring the first part, now we will also solve the requirements on the next part. So it is to prepare a summary of the permanent investment of Dirt Company, showing data the number of shares and the total cost for each investment. So as you can see on the screen, we have the summary of investment portfolio. The summary on investment, we have here the King Company shares, the Queen Company shares, and the Princess Company shares. The shares in total are 76,000, and on the cost in total are 1,870,000. So you just have to add all the shares to the different companies. So that's it. That's is my discussion for the problem 16-9.
So thank you so much, Mr. J.R. Kalasang, for that wonderful explanation. And now for the last part of our presentation, I will be giving you the summary of the whole topic that we've covered. So equity income primarily refers to income from stock dividends, which are cash payments from companies to their shareholders as a reward for investing in their stock. In other words, equity income investments are those known to pay dividend distributions. A stock split allows a company to break each existing share into multiple new shares without affecting its market capitalization or the total value of all its shares or each investor's stake in the company. So a rights issue is an invitation to existing shareholders to purchase additional new shares in the company. This type of issue gives existing shareholders securities called rights. With the rights, the shareholder can purchase new shares at a discount to the market price on a stated future date. So, do you guys have any questions, clarifications, suggestions? Because we will now be entertaining your questions, clarifications, and suggestions. So, are there any? So with that being done, thank you so much, guys, for listening and watching this presentation. I am your host, Ana Maria Tumaron, and this has been your reporters, Denise Aldaba, Shania Makiling, and J.R. Kalasang, with yours truly, leaving you with a quote, believe you're halfway there. Keep hustling to the finish line. Kung dili madala karon, ugma na lang. And we are the group is Purikit. Thank you so much, guys, for watching, and have a great day ahead. Thank you so much, guys. Bye-bye. Thank you.